I'm not on Citadel's side, and just Google me and go, if you want. I tweeted it out yesterday, and go look at my Twitter account. I wrote an 8-page report and that I gave to the SEC on why payment for order flow needs to be brought in. And, so just going about, let's say, oh, yeah, let's just, make stocks go crazy and break the shorts, and we'll break them that way. This isn't the way to go about it. So if you just wanted to trade stocks and you want to just go crazy, you want to do stuff, that's cool. But don't act like it's a crusade to, change the way the rigged markets are rigged, because this is rigging them more. These actions are rigging the markets more, and the whole game has changed. And now we've reduced liquidity on all the small and mid caps. You're going to see volatility continue to explode, and this is what we get. I mean, so I'm not blaming anyone for this. The whole system was rigged. If you want to go back to the blame, in the beginning, it probably is the Fed. The Fed's probably to blame.
I know. Dennis, I mean, we both yesterday when we were on the pre-market show, we were like devastated. Like the market structure, I mean, you got to adjust your trading strategies and stuff, but what is going on is just, like you said, it's just something that's never happened before. I don't know how it's going to change or when it's going to change, but if there eventually is going to flow down more costs for the institutional investors, the guys with the pension funds and the guys with the 401ks, they're the ones that are going to eventually feel the brunt of this, especially if the entire market caves in because of this.
Oh, it could. I mean, we're going to reduce liquidity. It's the small mid caps the liquidity is going to go away substantially, and that's because I make hundreds of short trades a day. Hundreds. Sometimes, maybe not all days, but a lot of days I'm making hundreds of short trades. What do? I'm getting on the bid right away. I'm trying to scalp spreads. I'm trying to, play, and obviously market makers are doing the same thing. We can't do that in GameStop now. So there's no liquidity out there because there's no market making activities. There's some algorithms that are driving price and bouncing it around, but there's no, market makers that are coming in and providing a nice orderly market. You can't. You get run over. So you're eliminating that aspect of the market. The market makers are the people who provide the liquidity to allow the institutions to get in and out of trades. So you just destroyed, liquidity was already low in some of the small mid caps to begin with, but you just destroyed it. So I mean, this is the market that's given. So I'm not going to complain and say, oh, I'm going to lose money. I'm not talking my book here. I will tell you, I in all likelihood am going to make more money because of this. And your prop traders are probably going to make more money because of this, because my P&L is not linked to market going up or down. It's linked to volatility.
Yep.
And if volatility increases, prop traders, hedge funds make more money. That money, and who loses is the pension funds, what you're saying, the people who have to, have to make big trades and move price around with big stocks, because the price impact from those orders coming to the market increases as liquidity is reduced. So it hits the pension funds on the bottom line because they're not going to get as good a price as they would if the liquidity was higher in the markets. It's shorts that provide that liquidity. Elon Musk, read a trading book before throwing out a nonsensical tweet that, obviously you did last night and get everybody, wound up. Shorts provide liquidity to the market. The reason that the market was tanking back during the financial crisis and the financials started to go down was because he had no shorts in there in those 3 weeks, and you saw the financials get cracked.
To buy
stuff back, because here's the honest truth. When a stock is going straight down, do you want to know the first person to buy the stock? Nobody's got the guts to step in and catch the falling knife when a stock is crashing. You know who it is?
The shorts.
A short covering their position. They're always the first buyer. They stop the crash because they're like short. So they're making money on this. So they're actually the first ones to come in, and then their bids bring more bids. Liquidity, get more liquidity, more liquidity. Take all the shorts out of it, and you just have stocks going wherever the hell they want to go. You have increased, price impact. You have a lot of losers here. So, but the losers are not the prop firms. The losers are not the hedge funds. The hedge funds will adjust, and they've probably already adjusted. And the algorithmic traders like Citadel have already adjusted. Did they get hammered a little bit on this initial move? Probably. But you know what? These are smart people, some of the smartest people, and they adjust very quickly.